We're focusing on the construction industry. Now, earlier today, Bayly Holmes-Ovcon posted an 8.5% rise in full-year headline earnings per share. We're now joined in studio by Mike Wylie, chairman of WBHO, to unpack the numbers. Mike, thank you very much for joining us today. Operating profit, 21% stronger. And looking at your building and civil engineering division, you've also said in your commentary that it's been a very exciting time because of the 2010 Soccer World Cup. Where to from here for WBHO?
Eleni, yes, we had a lot of exposure to the World Cup, and I think we're very proud that we delivered all those projects on time. In fact, well in time. You know, it wasn't just the stadiums; there were airports and roads and things. So it's been great. But they all complete. I think the stadiums were finished last year. So our 12 billion order book is obviously World Cup free, and that's about 80%.
And that's 21% down from the previous year.
Yeah, so it was most probably buoyed by the World Cup. Those big longer term projects always push up an order book. So 12 billion at about just over 80% of the total turnover in times gone by, that would have been acceptable, and we find it is acceptable. But going forward, things are under pressure, and it's going to be pretty challenging times.
Well, just looking at your revenue, that's up around 3%. 15.2 billion rand is what you hit. So also your margins increased quite a bit, 8.4% from 7.1% the same time last year. So things looking better all around.
The margin increase was because we had a few payment problems last time. So that margin would have been similar, but there were write-offs last year. So comparing like with like, the margin's pretty much the same.
Well, looking at the irrecoverable debts, I'm sure you're alluding to that, 95.4 million written off.
Yes, it was last year.
And of course, a tough time for the construction industry, because we are starting to see payments, late payments coming through as well. Do you see that being a once-off? Do you think that we'll have problems down the line?
No, I think it's going to be ongoing. I think when all of us in the construction industry, and I suppose most industries, have to be really careful about the contracts we sign, about the security we have around payment, because money is short everywhere. Money is short, and one's just going to have to manage that situation very carefully.
With regards to these irrecoverable debts, how much of that does government make up of? Because we know that there have been problems in terms of payment by government.
Those, not much. That was actually private sector. That was more developers, but that was last year. But we do see strains in other areas, and we have heard of other stories of other contractors not getting paid by government. But certainly, if I could just say on the World Cup projects, the government were fantastic. They came to the party with all, there was a lot of overrun on budgets, and so I think one's just got to manage the situations well, and just make sure that one's forecasts are accurate, so that one gives one's client, which if it's government, time for them also to get their things organised, so that payment can be finally made when the project's finished. So I think it's just a lot of control and management and focus on payment.
Looking at Australia, because your presence is starting to become far stronger in that country, and we are starting to see quite a bit of growth coming through for the Australian economy. We've also seen interest rate hikes in that country. Your prospects there, you're planning to secure even more contracts down the line in that country?
Yes, I think we basically got a footprint now in all the major centres in Australia, primarily though building, and we increased our profits quite substantially this year, I think about 20%, although revenue was similar or slightly down. So it's the 10th consecutive year we've had of increased profits in Australia, so we're pretty happy with that track record. We are concentrating more though on the resources sector, especially in Western Australia, so we think that's where the growth is going to come from. I think just from the numbers we see, there's huge amounts of capex going to be spent by the mining companies in the areas mainly north of Perth, and we're going to be focusing on that. But we hope that all that activity keeps the building market going as well. So
it's interesting that you mentioned the mining industry, and we're seeing a nice recovery in Australia, and that's also to be said about Africa as well. We're seeing work continue in the likes of Ghana, Zambia, Zimbabwe, Botswana. We know that your contract in the DRC came to an end. New contracts, mining industry with Sierra Leone as well, so we're starting to see a strong footing there.
Yes, no, I think mining in Africa and Australia are the two positive things on the horizon, so that's an area we've got to concentrate. It's obviously much higher risk, and one's got to be very careful. Things don't happen all that quickly, but definitely there's a lot of activity from Sierra Leone, Ghana, Zambia, all those countries you mentioned. And there's a lot of connectivity with Australia too. A lot of the Australian miners are coming over, so a lot of the consultants are similar, so there's a lot of synergy between the two.
Right, certain construction companies' earnings have come under pressure on the back of a slowdown in the government's spending on construction and infrastructure projects post-World Cup. Here's some comments from our market watchers this morning on this issue. Let's take a look.
The construction space not looking very positive at the moment. Government spend under pressure. And the economy has been under pressure. So, guys are holding back on the GDFI spend. And we're expecting a similar scenario with most of the mid to larger cap construction stocks. And I think some of the smaller ones are under major pressure.
I'm not one of the construction sector bulls right now. I think it's a sector that generally lags the economic recovery. I think we saw a huge run up until 2008 and just pre the World Cup, it had already started slowing down. I do think WBHO is a superbly managed company, so it's probably, if one had to choose a company to be exposed to in that sector, that would probably be my choice. However, my preference would be not to be exposed to that sector at the moment. I just think there are a lot of headwinds. When it comes to spend, when it comes to order book progression, I think we could wait a while before we get back in there.
Mike, what is your view on those comments? Because we have really two camps out there. Some say it's a great time to head into the construction industry because things are looking relatively bleak. We haven't seen those pipeline projects coming through from government because they have said they want to spend 846 billion rand over the next 5 years or so. So people are sort of divided in terms of the prospects for the construction industry. What is your view?
It really is difficult. I think what Yusuf was saying there is right, that GDFR spend is under pressure, as we were saying earlier. Government cash is short. There's a shortfall on the Eskom spend for the 2 power stations. So it's not going to be easy. I think that we certainly have been saying for the last couple of years now that 211 and 212 are going to be tough. So we're preparing for that, or maybe even it could go into 213. But there is, it's a conflicting thing, because on the other hand, you look at this pipeline of work, and you mentioned 800 million. I think we've heard that for quite a few years now. Nobody takes it too seriously. But certainly, when you look at the actual pipeline of jobs that we know of, that jobs that are on the cards, in the various sectors, and it's a very broad sector, from roads and mining and building work, and all the different subsectors of those areas. There's over a solid over 100 billion. In that pipeline, and just how much of that will come through, that's the big question. And I must say we would prefer just to plan on the conservative side and think it is going to, that delivery of that pipeline is going to be difficult, but at least it's there. So it really is difficult to say how it's going to pan out, and I think the next 18 months is going to be very interesting. But
well, you've had exposure to Eskom projects, to Sasol projects, and to Transnet projects as well.
Yes.
Do you think it's about diversifying further? We know you're in Africa, we know you're in Australia as well. You've also said in your commentary with your results that margins are going to come under pressure. Competition is also becoming rife in the industry. So a relatively bleak outlook, as you say, for the next few months. So where to from here for WBHO? I asked you this earlier. The numbers that we've seen this time round, a nice recovery. Do you think that we're going to be seeing a bit of pressure coming through on the bottom line?
I think I can say we're not too hopeful of improving, of growing those numbers. If I can just jump in here, we are quite proud of the fact that we reached the 15 billion mark, and we also went over R1 billion in profit. So that's quite a difficult thing to keep on.
And a final dividend of 220 cents a share.
So, and we've got 4 billion in cash in the bank. So we're in a very good position. Our management is very strong. We've all been together a long time. We're well positioned in all areas where we think the growth is, Africa, Australia. We understand the restrictions on South Africa, but we mustn't underestimate South Africa too much, because there is this big pipeline, and maybe it'll just take a bit longer. So I'm afraid I can't really give you, I don't want to be, it's really going to be very interesting, even for us. But we just take it day by day, month by month. We're putting in our tenders. The margins are tough, and we're just running the businesses, as best we can.